Let's get right to today's action. We have Tim Mulholland. He's Tamro Capital Partners portfolio manager, whose last two stock picks, by the way, are up nearly 20% since he told you to buy. He's back with 4 more plays. And Larry Shover is in the pits of the CME. Larry, I want to start with you, and let's start with the Fed. We've been talking about how the rallies, the stock market rallies, were moving from Fed-based rallies to economy-based rallies, but today it looked like the Fed was moving the market.
I believe you're right. I mean, right now, a painful panic feel to it. It's more like a binary feel. Somehow traders feel like either the Fed's going to do nothing or they're going to continue with the $85 billion per month, not even thinking that maybe it'll be something in between, and maybe the fact that, inflation's not high enough, our jobs picture still isn't good enough, but traders are very panicked right now and just don't know what to do, thinking it's a binary trade tomorrow, a big negative in traders' minds.
Okay, wait a minute. Panicked? That's a strong word. So tell me, what do they fear the most here?
Well, what they fear the most is the market will continue to grind higher, and I feel like most of us don't have appropriate exposure to the market. So whenever there's a dip, like this morning, we had a small dip in the market. S&P's down 5. Everybody's like, wow, maybe this is the big correction. We finally can get back exposed to the market, but it didn't happen. We bounced back up, grinding higher. People are chasing. That's where the panic comes to play.
Hey, Tim, forgive me. You knew this, but our audience didn't necessarily know it. You're Tim Holland, not Tim Mulholland. Forgive me for mispronouncing your last name. Let's talk about the housing industry. We were talking about that before. It is one of the juiciest sectors in the market right now. Some people say it's already topped out. You say not so. And you've got one particular stock pick, MDC Holdings. This is one of the tightest, well-run companies I've seen in the housing industry. Why do you like it?
Because it's got all the characteristics that we look for in a company, David. Tenured management team. The founder still runs it, Larry Mizell. Very flush balance sheet, over $500 million in cash that they can put to work, and a good core business. They focus on first-time and first-time move-up buyers. And you all were talking about the price action in Home Depot earlier, and if you read the press release for the quarter from Home Depot, Frank Blake talks about how they got off to a better-than-expected start to the year because of housing. And now there are 2 consecutive quarters where the management at Home Depot has said what was a big headwind, housing, is now a tailwind. And so we like MDC. We think it's well positioned. People are concerned about price inflation or land inflation, and we think who's going to get squeezed ultimately are not the publicly traded builders, but the mom and pop builders who just don't have the capital to participate.
I like Tim, and I know David likes Tim, because when he comes on with picks, they do well. Your last 2 picks up 20%. And as we continue through some of these other names, I'm very interested to know, your energy pick is Range Resources. There are so many names out there when it comes to all different subsets of what goes on in the energy sector. Why Range?
Yeah, Range is an E&P company focused primarily on natural gas. And when you're a commodity-facing company like Range Resources, you really want to focus on operational efficiency, because ultimately you don't set the price for what you're selling, the market does. And in the case of Range, not only did they pioneer a number of the unconventional E&P techniques that have really unlocked this incredible energy bonanza in the country, they've got a great first mover advantage in the Marcellus Shale in Pennsylvania, other parts of that part of the country, which means they bought the acreage at very attractive prices. So nat gas has gone from sub-2 to $4 and change, and we think the news around the permitting of the second export facility a couple of days ago is a significant positive, and it's just a very well-run, well-capitalized company that invested at very attractive prices years ago.
Tim, you've got more stock picks. We're going to get to them, but I want to go back to Larry for a second and just pull back at this overall market right now, because there's one factor that may affect the markets in a significant way that a lot of people aren't focusing on. You are. It's the fact that China is moving out of its treasury holding, like so many other people moving out of fixed income into equities right now. China is no different. They're reviewing their portfolio, moving out of the treasuries, getting more into stocks and real estate. How's that going to affect our market?
Well, it's according how it goes, but China's getting into the act. I mean, they're tired of our debt. They're looking at more attractive opportunities down the financial repression system. So they're looking at private equity. They're looking at stocks and bonds, et cetera. So that's going to affect the demand for our treasuries. It might put upward pressure on our yield, which could be a good or a bad thing, depending on how far back they dial back their treasury purchases.
Okay, so we're looking at the overall picture. Tim, I've got to know, where will we be, in your opinion, by, let's say, the fall? Because there could be lower volume this summer, and everybody should be ready for that. We often see it. But what about the fall, when people come back and they look at this market and say there's more to go, or, meh, we're done for the year?
Yeah, you know, my crystal ball's as foggy as everyone else's, Liz. But I do think, and you all have talked
Tim
about.
Tim picks stocks that go up 20%. So no matter what, he wins.
Knock on wood. And I wanted to mention to David, Holland is actually an Irish name, so being called Tim Mulholland is actually
there you
okay.
Go. There you go. Right. It's right in the picture. Thank you for.
It's still in the wheelhouse.
Yeah.
It does seem to sort of the earlier comments that people are underinvested still, and that there's this anticipation of a significant correction. And, you know, if you don't get that, it feels like there's still a tremendous amount of money on the sidelines that could rotate in. You get some good bigger picture data, you know, Q2 GDP and the like, and it feels like this could move sharply higher.
Well,
it feels
Tim,
like there's a lot of money waiting to get put
even
in.
if you do have the pullback, you have a pick that is sort of good in either environment. First Cash Financial, because it sells forfeited assets. It sells forfeited collateral. So if things do go south, this is in a good position, and it's doing well right now.
That's a fancy way, David, of saying it's a pawn shop.
Yeah.
And it's a fantastic company. Again, very tenured management team. Fantastic operating history. What's neat about First Cash is about 50% of their stores and their revenues come from the U.S. The other 50% comes from Mexico, where they are the largest standalone pawn shop format operator, and Mexico is booming. And so, to your point, as a significant chunk of the economy or the consumer base still struggles a little bit, those collateralized lenders do pretty well. The other thing is they have nominal exposure on the payday lending side, which is really the part of the business that regulators have taken the most time focusing on. Just a really well-run, well-positioned company with a fantastic franchise in Mexico.
Tim Holland or Mulholland, depending on which country you happen to be in. Thanks for that safety net, Tim. I appreciate it. Good to see you.
Sure.
Larry Shover,
Good
we're going to check in with you in a couple of minutes to see how the S&P futures close. The S&P futures are closing just about now in about 20 seconds. Let's go back to Larry Shover in the pits of the CME. He's there at the close. Larry?
I am, and just make no mistake about it, every jot and tittle of the stock market is under the closest examination right now. People are looking for the next big negative, hoping that maybe Bernanke will say something that will finally give us that 5% correction. They don't realize that we went through things like the fiscal cliff, sequester, Italian election, Cyprus. None of those things broke the market, so I'm hard to believe that Bernanke tomorrow is going to say something that will break our market. So the trade is painful, it's confusing, but we are grinding higher, and that seems to be the narrative right now.
Larry Shover in the pits of the CME. Larry, thank you very much.